Hello, guys. Good morning, good afternoon, good evening, good day from wherever you're listening to this from. This is proudly brought to you by Just to Trade Stock Brokerage Company. Guys, today we have a very beautiful and very insightful, very sweet topic: how to short on the stock market. Or you can say shorting on the stock market to make profit. Yeah, so if you've been following our videos, in our previous videos, we spoke about how to make profits using dividends, profit through stock growth, and profit through speculation. And today, guys, we are going to be talking about how to make profit using shorting a stock to make profit. That is what we are going to discuss today. And then we're going to see the practical aspect too. We are going to try on a demo platform so that we understand it better, right? Good. So basically, when we say shorting positions, what do we what comes to mind? So in simple terms, what is short selling? Short selling means to sell high and then buy low. To sell high, buy low. When I started trading, when I started growing up, going up the trading ladder, I used to think short selling was, with regards to time frame. Yeah, I used to think it was with regards to time frame, but no, it has nothing to do with time or maybe the period of selling. No, I used to think maybe you buy short selling means I buy stock A today, and then maybe in the next 4 hours I need to sell it. So that means it's short selling. No, guys, that is not what short selling is. So, and I said earlier, it has nothing to do with the trading period. So, in basic and simplest definition, you can say short selling is to make money when things go down. Short selling is to make money when things go down. So things like forex, stock, futures, options, etc., etc. Other commodities too as well, right? So before we proceed, let's get to understand the basic term and then what exactly it means, so that so that we understand it better, right? So let's understand what selling itself means. So let's go to our favorite website, Investopedia. Yes. Yes. So what does Investopedia have for us? Investopedia says short selling is an investment or trading strategy that speculates on the decline in a stock or a security price. Guys, let's take note. It says it speculates on the decline in a stock or a stock or other security price. It is an advanced strategy that should only be undertaken by experienced traders and investors. Not to worry, right after discussion, you have the basic idea so that next time when you want to make good profit, you know how to short, right? Good. So let's also check what Wikipedia has for us. Yes, so what does Wikipedia have? Wikipedia says short selling or shorting. Yeah, it's the same. It's a term for a practice on the stock market where it is possible to profit on falling prices. Yes. So guys, take note, it is possible to profit on falling prices. So for short selling, in short, means that an investor first borrows a number of shares for a loan from the broker. This is typically done by a major player who has a broad or more or less fixed stock portfolio. All right, guys, let's not rush things. Let's go step by step. So we're going to discuss it. We're going to break it down so that you understand in depth what exactly short selling is. Yeah, so not to forget, we spoke about short selling, selling high, and then buying low, right? Selling high and then buying low. So just put this in mind so that you know how to go about it. So short selling, as we can see on our screen, it says trading something that I don't possess. That is the second aspect of short selling. You short sell something you don't have. So now the question then comes in: how do you get what you want to short sell? Don't forget, we said short sell is what? Sell high, buy low. Now, this slide says that trading something that you don't have. We are going to talk about that briefly. So, the next question is: why do we short sell? Why do we short sell? Why do we short sell? All right, guys, it says first, to profit on the bearish market. Without short selling, it can be very difficult to make money from a down market. Don't forget, the basic idea is that you are speculating that the prices on the markets will go down. So you sell at a high price, someone buys it, and then you later go back and then buy it. All right, let's continue. It says to hedge the downside risk of a long position in the same security or a related one with short positions. Yes. And it says the third one says you are good at finding at companies where something is going wrong, which you believe will eventually result in a decrease in the stock price. Do you understand that? Good. So now let's break it down and then discuss how exactly it works. I mean, on the background, what exactly happens when you short sell, right? Good. So guys, when before you short a position, before you short sell, you the client or you the I mean the investor, you the trader need to go to a broker, right? So in this case, in our scenario, the broker is just to trade dot online, just to trade limited, right? So you go to just to trade and then you tell them, oh, you want to short a sell. Sorry, you want to short a stock. But first of all, just to trade will tell you you need a margin account to you need a margin account so that you can short sell. So later we're going to talk about why you need a margin account, right? Good. So the basic idea, don't forget, is to sell stocks that you don't have. So the broker gives you these stocks that you don't have so that you sell it at a high price. Then later you return the stocks back to them, right? You sell it at a high price, then you watch and then wait when the prices of that stock go down, then you go and buy it back, make your profit, and then you give back the broker his or her shares he gave to you, right? So the main idea here is that you sell something you don't have, given to you by the broker. Then at some point in time, you go back onto the market and then buy it back at a lower price. So let's make it practical. For example, you sell a stock at $10, right? Now the price of the stock on the market is let's say $2. That means it has depreciated. That stock has gone down. That stock has depreciated in value, right? So you realize that now the difference, you go back and then buy that stock so that you can be able to give it back to the broker, because don't forget, you borrowed the stock. The stock is not yours. So the broker needs his stocks back. So you go back and then you buy it at a low price. Then you realize that, oh, that was a very good deal because you sold it at $10 and now you are buying it back at $2. So let's say you've made a profit of $8 and then you give back the broker his stocks, right? So with shorting, one thing you should know is that when prices are going up, it is very, very, very bad for you. Yes. In shorting, you are always anticipating and speculating that the prices will go down. So when prices go down, it becomes positive for you, the trader. You see, normally in a long position, when you are opening a long position, the basic idea of long position is that you buy at a low price and then sell at a higher price and make profit. But then for short selling, it's the other way around. So in summary, you lose money when prices go up during short sell, and then you gain money when prices go down, right? When prices go down. So let's just visit the trading platform and let's see how it works. So we can try and then see how it works on the platform. Yeah, so this is a demo platform. We have our balance here, as you can see. So we're going to short sell some stocks and then we see it for ourselves. Okay. All right. Okay, guys. So we are going to short sell some holdings, SBOE Holdings. Then we see how it works, right? So you click on it and then, okay, let me refresh the page. Oh, so guys, we're going to short sell SBOE Holdings Incorporated. So we put it there, new order. So let's say we want to sell. let's say 1,000 shares. So click sell. So it's done. So now let's look out for the price to go down so that we can buy it, right? Let's look for the price to go down. So it's the price keeps changing. Mhm, mhm. So you can see the profit negative 60. Whoa, guys. So that means the price is shooting up, which shouldn't be because we anticipate that the price should go down so that we buy it at a low price because we've sold it high. So you can see here the profit now becomes negative 60. Whoa, that means we are losing here. Okay, so it's going down now. Whoa, let's see if we can make some profit here. So guys, always you should always take into consideration the kind of stock. I always say that, right? So if you are going for a short sell, you should be sure that you feel okay. So the price of that stock will be going down now. If not, guys, you're going to lose. So let's continue. Let's check out what we have here. The prices keep changing, like you can see. Mm. We can even add, let's also short sell Facebook. Okay, it says also done. Let's check if we'll make some good profit here. Okay, we can also short sell McDonald's. So let's say 1,000. Let's see if we're going to make some profit here. Well, guys, we are losing. Okay, so for McDonald's, it says we've made $10 so far. Okay, let's see. We can actually short a lot of stocks too because we have a lot of money in our account. It's a demo account. So let's say, all right, we can add Apple. Okay, no, AAPO. All right, so let's short Apple too as well. Don't forget we are selling, short selling. Also 1,000. Let's see which is going to fetch us. Oh, okay, good. So you can see McDonald's Holdings is giving us $100 here as profit. Whoa, guys. So let's just check for a while and let's see if we're going to make some good profit here. hmm it keeps changing. So once profit reduces, then you know that the stock is going up rather than going down. Losing a couple of, money. It's quite yes. So you can see, oh, Facebook is rather going up instead of Facebook going down. Okay, so McDonald's holding still giving us $40 as profit. hmm Yeah, this is one of the most, easiest trading platforms you can also use with just to trade. Very user friendly, very easy to go. Yes. Oh, great, great. So we have 120 here for McDonald's. Yay. Yeah, that is good news. Yes. Yes. Yeah, that is good news. hmm Oh, it has reduced to 40. So guys, this is how actually it works, right? So now you have sold it. You didn't have it, you borrowed it from the broker, you sold it, then you go back to the market when the profit, I mean the price of the stock has gone down, you go back to the market, then you buy it at a low price. So yeah, let's just give it some 1 or 2 minutes so that we try and then buy it and see how it works. Yes, we want to buy it back. Oh, but $40 is not a lot. hmm Let's just see how it goes. Oh, 20. Oh, we've lost $300 for Facebook. Oh, oh, okay, good. 60. Let's go. Let's go, McDonald's. Let's go. Okay, it goes to 30. All right. So for this, just for practical sake, for seeing how it works. So now let's go to, we have 30 here. So let's go to McDonald's and then let's place another order to, but this time around to buy. So we've bought it back. Yes. So you can see we sold it and then we bought it back. You can see, so we made a profit of $60, guys. We made a profit of $60. So yeah, this is how it works. This is how the selling works. But then I spoke about the margin call. So most of the times when you borrow from the broker and then instead of the stock going down, the stock keeps going up, it gets to a level where the broker says, "Hey, no, my friend, we also can't run at a loss because you borrowed it. So we have to make sure I mean, the stocks we give to you is in safe hands." So there's a margin call where they will close all positions to prevent it running at a loss. That is basically the margin call, where they are going to close all positions to make sure that what it prevents running at a loss. So yes, that is it, guys. This is the basic idea of how to short sell positions. Yes, so the basic idea we said was what, to make money when the stocks go down. Yes, and then we showed some pictures here, making money when stocks go down. Yes, so you can see step one, the short seller borrows the stock from the broker. We spoke about that. Short seller immediately sells the stock on the market, and then the short seller buys back the stock from the market, and the short seller returns the borrowed stock to the broker. So, in summary, this is what we have for short selling. The reception actually, it becomes positive when, I mean, it becomes positive when the prices that you've sold, the stocks that you've sold, are going down, and then you buy it back at a low price. Then you give back the broker the stocks you borrowed, and then you are good to go. So, yes, guys, that is it for now. We spoke about shorting, short selling, sell high, buy low, and then we spoke about you borrowing from the broker to sell, and then we spoke about why to short sell, and then we also gave the positive and the negative, and then we also tried it on the uh, platform, and then we made profit of $60, which is very good. Yes, so if you're able to short the right stocks, then guys, you are good to go. Yes, so that is it. Hmm. Let's see if other stocks made good money. Not yet, not yet. Yes, but then as time goes on, we believe we'll make some good profit, and then we'll be smiling once again. All right, guys. So this is it. We're going to come your way once again, another time with another interesting topic. So if you have questions, you can drop them at the comment section below, and we'll do our very best to answer everything and make sure we explain everything in much more detail so that everything will be clear and then you can make the best out of the stock market. Thank you very much for your time. Once again, it's bye bye.